Good morning, traders. Starting off the new week here, right after Christmas. And basically, we got storms here. That's like the third or fourth storm, 50-mile-an-hour wind gust. It's keeping us awake here most of the night. So that's why I'm up so early. So to get started here, so we saw last Wednesday, uh, uh, no, a week ago Wednesday, a big rally in the IWM. It was leading the pack in the markets. And what we have here is an inverted head and shoulders and a breakout of that inverted head and shoulders. And if you do a measured move of that breakout, guess what? We completed that pattern Monday last week. See? Exactly cleaned it. And ever since then, we've sold off the IWM. Okay. This channel here, if you go in a bigger time frame, if you want to see how I got that, uh, so basically, this is a topping formation on IWM, and this is the current topping IWM channel. Okay, and that's how I came up with that. Okay, so just little headways, but the money flows are hit that high Monday, and they sold off all last week on the Russells. They were sacrificing the Russell to push up other aspects of the market. Okay, well, keep that in the back of your mind. Now, what we got going on? Guess what, guys? This this here's an inverse head and shoulders. Okay, and we had a breakout. We've completed the pattern. So is SPY going to do exactly the same thing as what we saw on the Russell? So it's very important here. So this is a range. This range right here. This is a range. If you put a regression line off this high to this low, this is the range of the regression line right there. And you see how we back tested right there as well and held. This is the range of that regression line. We came up to the top of that regression line and we found uh, immediate sell side pressure, suggesting that this is a very significant high in the SPY. So be very mindful of that. So we're also into the 690 gamma positive gamma exposure. Going above that, we potentially squeeze. So this is a major. There's a lot of open interest at 690, but there's a lot more open interest at 700. So both of these are major areas where the Wall Street really wants to keep price below both of them if they can. Ideally, they get a bigger paycheck if they can keep price below that for in the year close. So because Wall Street's the one's been primarily been financing and writing, uh, taking on the risk of writing 100,000 contracts a day at SPX 7,000. And so that it's in their best interest to suppress price under 7,000, under six or a spot under um, SPY 690. They want to keep prices down below that for the end of year close. The longer they can keep it under that, the bigger end of the year payday they get because us retailers, we've already committed our capital, and so we actually rely on prices going higher, whereas they want prices to be stable or to lower. It's in their best interest not to keep prices higher. Uh, given all the billions, hundreds of billions of dollars worth of gamma, which they get to collect at the end of the year, keeping prices suppressed. So just be very mindful of that going forward here in your trading. Okay. Uh, we're currently well above our 20 MA. So we're extended past that too as well. Okay, so we're into some major resistances here on the SPY and the IWM. Okay, now the Qs, they could keep us all going with the Qs. Uh, they have been underperforming. As you can see here, I got a gain fan on here, so we're into that gain fan resistance. We're also at 625. There's a major positive gamma wall right there. Similar situation. Wall Street wants prices below that 625 to close out the year. So they ideally do not want any price acceptance higher. Okay. Now, ideally, you see We got this downtrend here. Where's it going daily? So we have the all-time high downtrend here. Boom, boom, boom. So ideally, to complete the pattern, we're actually going to break out above that downtrend. Okay, that's ideally. That's. So this one here is actually not completed. There's one aspect there that it has not completed. So be very mindful. The measured move could go, continue to go higher. They might need one last push up there. Um, so be very mindful of that. Going forward here. So, and as you can see, this is a major chop zone. Okay, and we've been in a big, uh, you know, uh, we could very easily see how we came down here, down to the top of that zone. We haven't done that yet. We haven't back traced back down to at least to the top of the zone here. This is a trading zone right here. So trading back down to the bottom of that makes all the sense in the world. That's right around 620. That would be my first target one, 620. Then we'd have basically 619 be target two, basically. And if we lose 619, oh, you got these highs right here. 618, 618. So basically every uh, iteration here. So around 618 would be a support. And then we have another gain fan down here that could be act as a major support at the 20. And so it makes all the sense in the world in a choppy market to come all the way back down to the 20, daily 20. So it would not take much at all to achieve that. So be very mindful of that going forward here. Some charts that really stood out to me this morning. I was doing my charts over the weekend. I was actually looking at Boeing. I haven't looked at that for a long time. So I do want to point out here on Boeing, going here in the daily. You see this downtrend right here? We've only got one touch, so we've got 1 day's worth of value to create the fan, you know. So, it might be a little bit too early here. Okay, so right there, I think that's where it was. Yeah. So last Monday, I got this off a little bit. I'm gonna have to get it. There you go. That touch right there. There you go. The 4 hour, it showed it, and a touch there. So, keeping an eye on this right here. So my main thesis here, and I actually posted on X and StockTwits. I'm looking for a failure of this area up here because there are two things here that I'm worried about. This right here, if you put a regression line off these highs to these lows, that's that red line right there. Okay. And if you draw a line straight across, this is a resistance area. This right here is proving resistance for this upper distribution of inventory. So basically, we ran up right into that resistance. Okay, and so this, obviously, this is a starting to look like an inverse head and shoulders, where this could be resistance. And that doesn't mean that we can't break up here to build out a bigger thing. But, just be very mindful of that. But I don't particularly want to short it at this resistance because we have broken above the monthly 5 SMA. Okay, so, anytime we're on the bullish side of that monthly 5, I don't particularly want to be shorting uh, that situation. But I would be looking to, if we came down here into the uh, 209, 210, or even potentially, if you want to, do a complete 100% retrace down here, the 206, 207, 206, you know, thinking that the monthly 5, they're going to try to defend that, for a higher low scenario. So that's my main takeaway, that this should be supportive evidence right here, the monthly 5 SMA. So coming back down into the or monthly 5 MAs, got SMA and EMA right in this box. Should be supportive for Boeing. That's pretty much my theory on that idea. Looking for potentially by the dip for a higher low. That would be my primary thesis on that. Hey guys, NVIDIA is the most important chart one of the most important charts out there in this market for this driving force. And this is a similar situation that I'm seeing with the Boeing. See these all-time highs? If you put a regression line on these all-time highs and to this range low right here, the regression line ends right here. And guess where we're at? Right there. So this is the perfect spot to be a double top lower high for NVIDIA. So just be very mindful in the back of that mind. Although we are above the monthly fives. Do I think that's a big deal? Yeah, I don't know until we start accepting prices below it. Well, I'm just saying, but this is the ideal, possibly bull trap area for NVIDIA. So I definitely want to keep this in the back of my mind going forward here. Okay, that could be uh, definitely reason to think that they could sell the markets here. Another one I'm looking at here, guys, and that is ARM. Let me go into bigger time frame so you can see it a little bit better. 3 or weekly, maybe. There you go, guys. This thing is just ugly. It's just breaking down, guys. Um, so be very mindful of that here on ARM. Another thing, when we just started the pattern, if you put a regression line right on that, all the way down to the lows there, so right here, we're coming into our first potential support. I forgot to put this one on. There you go, the 109-ish area. That's our first potential support. It'd be a higher support, which has not actually worked in the past. But so I wouldn't want anybody to come in here and just load the boat to the short side because I showed you this chart. But we lost the monthly 5 SMA. Momentum clearly is not on the side of this. So be very mindful of this. Very good chance that we're going to see how we had the multiple tops and multiple bottoms. There's a very good chance that we could actually come right back down here again into the 80s, if not worse. You know, uh, Definitely keep this one on watch. It's, in my opinion, a very bearish chart, and I need to have evidence to actually be trying to buy the dips on this. Ideally, as a momentum trader, I don't want to trade anything to the bullish side unless it's above the monthly 5 SMA or monthly 5 MAs. Okay, so I don't want, as a momentum trader, to ever trade that down here. Okay, guys, and that's why we're seeing a lot of just not getting anywhere, like Meta. Meta's trading under the under its monthly 5. So basically, this is actually technically, in my opinion, based off my analysis, we're bear flagging on Meta. Oh yeah, yeah, I said it. We're bear flagging on Meta, and we're honestly, this is a topping candle on the weekly here on Meta, topping reversal candles. So be very mindful. See that downtrend there. Now we're fading away from that. I have to double check where the daily 50 is, but we're possibly losing the daily 50 here on Meta. Below this, we're right into resistance, range high resistance. We're losing that early on this morning potentially. I think Meta, is warning us of problems. Another one that's really bearish, Microsoft. Microsoft is going to bigger time frames so you can see it. Okay, guys, monthly 5 SMAs up here. We just cannot raise our head. It below the monthly 5. There's resistance here. This is a textbook bear flag. Absolute textbook bear flag. Okay, guys. The way the price action's going right here. So heads up on that. And you know, uh, see the length of that regression line. You can actually put uh, fib extensions on that regression line length. And if you put your little cursor there on the 100%, right there where we started right there on this breakout, that breakout point right there, that's exactly the 100%. So this is actually projecting a complete reversal of the this April move here. So we are potentially projecting a very deep move here on Microsoft. So be very mindful of that going forward here. Other ones that are really standing out to me, I think those are the ones that are really, give me 1 second here. Those are my bearish charts. I got some bullish charts. Okay, real quick with Apple, we're right at the daily 20. It's hard to say which way it's going to go here, but we are above the monthly 5. So this is a bullish pattern. We did, as of last week, reject. We have a double rejection now of uh, the resistance area here. So we really need to see price start accepting. Okay, we need prices to accept basically the 277 and higher. Okay, so basically 277 and higher, we're starting to this prior high right here. That's all important for the bulls to come back in and having the bullish parade. Okay, uh, and on the flip side though, guys, if we start accepting below 270, then we that sets up a bearish scenario below 270. Okay, guys. Google. This is actually giving us the very first indication of maybe some weakness and reversals here. So basically, this pink area right here, we are potentially rejecting right here on Google at this pink area for a correction. That would be the very first sign that the trend might be changing, the uptrend, because we're getting higher highs, higher lows, that might be giving us an indication that we need a deeper pullback in this market. And basically, we had this breakout, but it hasn't been back tested off this bigger breakout here. So there's a very good chance, even if we come all the way down to basically 279, basically anything above the monthly fives, which right here, okay, I would still say this is still a very valid area, 272. So the bull trend is still intact all the way down to 272. Now look at that, guys. That's a $40 difference. And the bull trend is still valid. Okay, guys. So there's plenty of room here to bring Google down, destroy a lot of the positive gamma, and still resume bullish trend next year. And the last one I'm going to talk about is Amazon, guys. So some main takeaways here on my trend lines here. Um, so uh, Uh, so basically, this is all-time high rejection, major overhead resistance here. We cannot have not been able to gain any ground up in this price point, suggesting that was a blow off top phase in Amazon until proven otherwise. So we'll see how that plays out. So we came up to the swing high right here. You draw a regression line on the retrace right there. Okay, on that retrace. Okay, and we found uh, a big takeaway here uh, on this, this regression retrace right here, that uh, on the sell-offs, the bulls could not hold that support, but on the rallies, it acted as hard resistance. So if you got below it, it became hard resistance. Okay, guys, so we're currently looking above that area. So that warns us that there is a lot of supply above here. Knowing that they were willing to sell down at this lower price point, and we're currently trading above that. And there's nothing about this pattern that has really changed. And we're just barely looking above the monthly 5 MA. This has the ingredients of an ideal bull trap. I'm telling you that right now, guys. The idea of looking right above the monthly 5 MA, the point at which traders want to start looking to be bullish in the market, to adding to bull positions in Amazon, and for this to up and implode. So be very mindful of that. So this one right here, like uh, Friday, I was looking at it from a bullish standpoint because early on Friday morning, it looked like we were trying to break out, and right before the buzzer, they started selling it off right into that resistance. So I walked away from it. I didn't even trade it because that was going to be one of my top ideas there Friday. I thought we were actually getting momentum to start pushing out to the upside, but I didn't trade it. Thank goodness. I actually traded Tesla and Tesla puts there Friday, which worked out. So okay, guys. Like the video if you get a chance. Retweet me if you get a chance. Appreciate it. And any comments below are appreciated. Positive comments.